Hello everyone, welcome to Global Government News. Today is Tuesday, October 19th, 2010, and I am Darko. Welcome to this news bulletin. We're going to be covering the economy in this video, and I have a bunch of news that I would like to cover. I'd recommend new listeners to please visit my website, and that is ggnonline.com. That's www.ggnonline.com. You'll be able to learn a little bit more about me. But also, you can check out my most recent videos. This first article up for economic news is the Dow drops 165 points, finishing below 11,000. It says China's move to slow its economy collided with concerns about the foreclosure crisis to royal financial markets on Tuesday. And it says here the Dow Jones Industrial Average had its worst day since mid-August, falling below 11,000 and wiping out 2 weeks of gains. The average remains up 5.3% for the year to date. That sounds weird. Banks stock slid, and it says crude oil futures fell below $80 a barrel in its biggest one-day decline in 8 months, and gold dropped 2.6%. While China's move to tighten interest rates was relatively small, its timing surprised investors, many of whom had been fixated on the U.S. market, where the Federal Reserve is expected to soon embark on a new round of monetary easing, printing cash. And they're going to do it anyways, they're just using that as an excuse. And it says dollar has best day in 2 months after China rate hike. It says here the safe haven dollar headed for its best day in 2 months on Tuesday, while the euro and commodity-sensitive Australian dollar tumbled after a surprise interest rate increase from China prompted investors to cut risk exposure. It says here investors feared a quarter percentage point rise in China's one-year lending rate could dampen Chinese and global growth and slow the country's voracious demand for commodities, many of which come from Australia. And it goes on here and it says here the China rate surprise, and this is how all the news are reporting it, is a big surprise. Well, you think that the bankers that really run the planet, or at least influence most of the global economic policies, you think it was a surprise to them? And it says that right here, it says that gold fell as much as 2.7% on Tuesday, set for its largest one-day fall since early July, as a dollar surge after China unexpectedly raised interest rates, and the United States said it will not devaluate the dollar. So you move on here, and it says China surprises with first rate rise since 2007. China's central bank surprised on Tuesday with its first increase of interest rates in nearly 3 years, a move that reflects concern about resurgent asset prices and could mark the start of a more aggressive phase of monetary tightening in the world's fastest growing major economy. And, I covered this, what was it, about 4 days ago in my last economic news video, where, we had just had it was day after day after day for about a good 2 weeks in the media, where the West was basically bashing the East, mainly China, for not letting their currency to appreciate. And then I covered this. I covered this right here, October 14th, and I covered it on the 15th. China's yuan hits new high at 6.6 against the U.S. dollar Thursday, and I don't remember seeing this in any of the news in the past 4 days. But it says the value of the yuan, China's currency, the renminbi, hit a new high against the U.S. dollar Thursday at a central parity rate of the yuan was set at 6.6 per U.S. dollar, according to the data released by the China Foreign Exchange Trading System. So there you go. And I think that's some pretty important news, right? It says here dollar declines for fifth week on prospects of more monetary easing by the Fed. And this was from the 15th. And I just noticed down here in this article that was from about 4 days ago, it says stronger yuan, and it was included in this article. It says the yuan advanced and it touched 6.6, but it goes down here and it says the report will be delayed until after the meetings of the Group of 20 nations in the coming weeks, according to a statement from the Treasury. This next story is from Reuters, and it's titled "Wall Street Drops as Mortgage Worries Hit Banks." It says the U.S. stocks posted their biggest loss in 2 months on Tuesday on fears banks might be on the hook for billions of dollars in soaring mortgage bonds. Said the afternoon sell-off hit investors already reeling from an unexpected credit tightening by China and disappointing financial results from Apple. And you move on here. Oh yeah, like I was saying, yeah, I mean it's you call it a currency war or whatever, but yeah, when they did that, when they let their currency appreciate, and then they jack up interest rates, it screwed over the West. I mean, like I said, I've said this before in my other videos. I'm not an economist. I'm just a normal person that's trying to like follow the madness. I just realize that most of it's a fraud, and a lot of the things are overcomplicated and made very complex. But really, most of it's just fraud and speculation, and it's not really a free market. And that's what I understand. I think that's all you really need to understand when it comes to this, and that everything is being pushed to be global and get away from national sovereignty. In fact, now the IMF or the World Bank, they want to actually have complete oversight over what nations do over their currency, set rates, interest rates, and everything. So, I mean, that is the future for us, my friends, and it doesn't include national sovereignty or with your currency. It says China blames the U.S. for currency tensions. Well, yeah, I mean, that's what the U.S. Was basically, in basically Western countries, including U.K. and that, and the EU, where they were, like I said, all these articles, they were just bashing China. So they're right. And it says China says the current global currency tensions are the result of Washington's loose monetary policies and its double standards in economic affairs. It says the U.S. caused a currency dispute through policies of printing money and setting low interest rates. China's Xinhua News Agency said in a commentary published on Monday. So yeah, I think we're at like, our interest rates are like around 0% or something like that. And it says here in this quote, it says, in the eyes of some American politicians, it is entirely reasonable to print money and keep the dollar exchange rate low, but it is illegal for other countries to protect their economic and financial security by pushing down exchange rates, it said. They're talking about the Fed. And it says this is clearly a double standard. And if you haven't really been following this, I'll just read this for you. It says Washington, it gives you a little background. Washington blames China for holding the yuan low so that Chinese goods can enjoy a fake competitive edge over other products. China, however, continues to resist pressures from the U.S. to raise the value of its yuan currency against the U.S. dollar. And this is a cool little article from the economicpolicyjournal.com, and it's titled Why California is About to Fall Off into an Ocean of Unpayable Debt. And it says Perry Wong, Director of Regional Economics at the Milken Institute, is co-author of a new report addressing California's pension shortfalls, the role of demographics in designing solutions. But it says some of the key findings in the report include, by around 2012 or 2013, the three major state pension obligations will be more than 5 times as large as the total state tax revenue. Not only will California's growing senior population depend on Medi-Cal and other state services, but public school enrollment is likely to rise in the coming years. The state can ill afford to fund pensions by cutting back on these services. It says in 2009, the pension liability came out to $3,000 per working age in the state. Raising employee contributions alone will be less effective over time as the ratio of actively contributing members to benefit recipients continues to decrease. Currently, the average state employee contributes to the system for 25 years, but will receive benefits for 26 years, and the number of benefit receiving years is increasing as longevity improves. And it's just a bunch of hokey. They always say that we're living longer. Do you think we're living longer, guys? Because I don't know about you, but when my grandparents die around 70 years old, and it's more of the baby boomer generation than it was the generation prior to that, like my grandparents. And I'm 30. I'm almost 30 years old now. So most of the people that are usually about 40 years old to about 65, going on 70 now. A lot of them have really bad health. And so I don't buy this crap where they keep saying that like we're living longer, because half the people I see are obese, have diabetes, have cancer, bronchitis, whatever. Says moving on. Oh yeah, and they can't afford any health care. That's the kick in the ass. Says here, EU Commission proposes European-wide value-added tax. The European Commission proposed the creation of a European-wide value-added tax as part of a package of proposals. It said the European Commission today proposed the creation of a European-wide value-added tax as part of a package of proposals to find new sources of revenue for the next European Union budget. And so what they're saying is it's just going to be another tax on top of all the other taxes that you already pay. It's not going to be value added, it's going to be value lost. It's going to be a national tax. Democrats make election pitch to help seniors. Just some really sick news here. Democrats are making a pre-election pitch to give Social Security recipients a one-time payment of $250. God, part of a larger effort to convince senior voters that their party and not Republicans will best look out for the 58 million people who get the government retirement and disability benefits. And no, the Republicans are not, I don't even want to go into this because I don't have time right now. Just check out my other videos. Both parties are the same. And that's just pretty sick that they're doing payoffs because, both parties agree that they want to raise the retirement age and cut pension benefits to these people. So it's just, wow. Analysis, a strong enough dollar in U.S. is in the best interest. Well, you really think so there, buddy? White House warns banks over foreclosures, says Reuters. The White House warned banks on Tuesday it would pursue them for any mortgage practices that violated the law. It says piling pressure on the financial sector after two institutions lifted their freezes on home foreclosures, and they're talking about Bank of America to resume foreclosures. It says Bank of America says it plans to lift its freeze on more than 100,000 foreclosure cases in 23 U.S. states next week when it begins resubmitting foreclosure documents to courts in those states. After halting foreclosures earlier this month on questions of faulty paperwork, the United States' largest mortgage provider says it will resubmit documents in 102,000 foreclosure cases in the states that require a judge's approval to restart the foreclosure process, the Washington Post reported on Monday. And it goes on and says here, banks to restart foreclosures, and it's not just Bank of America, it's GMAC. So, and which is crazy, right? Because I have this article back here where it says home construction is increasing. Well, if they're going to be kicking all these people out of their houses, then you're going to have a big pool of uninhabited houses. So how could home construction go up? Says Chicago Sheriff says no to enforcing foreclosures. Two of the largest U.S. mortgage servicers have said they will resume home foreclosures, blah, blah, blah. We just went over that. But a big city sheriff has news for them. He won't enforce their foreclosure evictions. And you look in the news now and you have that one woman or that family that is living in their foreclosed house. Home construction grows. See, I just went over that. Suggesting that a lull in the housing market that followed the expiration of home buyer tax breaks in the spring has ended. And if you don't believe what I'm saying, just the combination of weak demand and large supply of vacant homes for sale will leave housing starts subdued for several years, says Paul Dales, economist at Capital Economics. We doubt that housing starts will reach 1 million. And then it goes on there and gives you more information on that. There's the defense cuts. David Cameron says 42,000 jobs to go. And says recent veterans of the war in Afghanistan are understood to be at risk of redundancy as 7,000 jobs go in the Army and 5,000 in the Royal Navy and 5,000 in the Royal Air Force. And says overall the defense budget is to be cut by 8%, but Mr. Cameron insisted that Britain would continue to meet the NATO target of spending 2% of GDP on defense. So there you go, guys. So why isn't this a problem? Well, because they're, like they said, they're going to continue paying what NATO tells them to pay, and they are part of the global government, and they are a global army, just like the U.S. We're global citizens with global armies, and we are no longer nation states. So you can just depend on other countries to pick up the slack. But you can also expect the police state and Big Brother to continue to get worse, to get bigger. This is from October 13th. The U.S. is actually looking at a value-added tax as well. Goldman Sachs pay and bonus pool hits $13 billion. German minister rules out relaxing immigration rules to tackle shortage of skilled labor. And Wall Street is a new tax collector. Governments relinquish taxation powers to big banks. So there you go, folks. Thank you for joining Global Government News. Have a lovely day. Thank you.